What if the crypto regulation is not about control, it's all about the capital? It's not about banning crypto or imposing huge regulatory policies, all about creating a structure that in which you can fit in crypto in the traditional market, where controversially crypto was introduced to replace the traditional finance. This is not just a conspiracy, it's already happening, and you can see the Rick Rieder will be the next Fed chair if everything aligned, and this is going to change the crypto narrative entirely to the institutional side, not in the perspective of decentralization. And this is not about one person, this is all about how Wall Street is going to take the monetary policy if they took control of it. Like whether we can see a capitalistic thinking in the monetary policy aspects rather than restrictive or regulative thinking. And this difference will change entire course of the crypto era. As you are a serious investor or you are following my channel seriously, you already know how important the Fed decision to the crypto is. Even though for the newcomers, I will explain that in a 30-second. Fed actually control the liquidity of the market, like how much money is flowing through the entire financial ecosystem. And the liquidity drive the risk appetite, means how willingness is that induced to the investor who ready to invest in those type of volatile assets. And crypto is the most volatile asset of all time right now. When Fed cut rates and print money, in this case the crypto will rally. On the other case, if there is a quantitative tightening and they reduce the liquidity, Bitcoin will decline. From 2024 onwards, it's not all about new stories or new narrative, it's all about liquidity, because there is a massive shift in industrial adoption for the Bitcoin and rest of the cryptocurrencies, starting from the ETF launch of January mid 2024. And here is what make everything stand out if the Wall Street enter in the market. Because Federal Reserve was always oppositional regarding in the case of crypto, but on the other hand, the Wall Street is more positive towards crypto. The Powell already mentioned in 2023 itself that Bitcoin is a speculative asset, not a store of value. But in the perspective of Wall Street, they have a great risk appetite. They don't hate risk, they actually structure the risk to bet on the risk to get most out of it. Their motive simply don't ban it, let's structure it. From the ban of crypto to the regulatory aspects, we already seeing a lots of improvements already from the mid of January 2024 as ETF launched. In 2013 to 2023 era, SEC under Gary Gensler, they are imposing regulation by enforcement for the crypto side, and crypto is a security fraud until it proven not. Coinbase, Binance and Kraken, all of them are sued, and ETF applications were denied for a decade. But interestingly, in 2024, the Bitcoin ETF got approved. From that onwards, we saw a massive shift in the regulatory aspects. On July 2025, Genius Act passes and the stablecoin framework just signed into the law. On September 2025, SEC approved the fast-track framework for listing tokens as a standards, and in that case, the ETF approval window is just shrinks from 240 days to 75 days. On at last Jan 2026, Clarity Act expected to pass Senate. In this case, Bitcoin is going to be a commodity instead of a security. Wall Street actually don't want to kill the crypto, they actually wanted to structure it. ETFs and custody rules and regulated on-ramps and clear classifications, and turning a complex architecture into a simple structured format so that they can deploy the capital at scale. This is not actually a fringe anymore, this is now an allocation strategy for the institutions to play into the market. But here is that nobody is saying, if Wall Street took control of Federal Reserve, Bitcoin will win first and altcoins will be far behind Bitcoin in this case. Bitcoin is already a commodity now, CFTC is already approved, no issuer, no CEO, no company. It fits cleanly into the ecosystem, it has their own ETFs and futures and options, etc. And Texas, Arizona, New Hampshire and all these state governments are already added Bitcoin as a treasury assets, and MicroStrategy hold around 257k BTC right now, and it will act as a corporate treasury. But in the case of Ethereum and Solana and XRP, they are literally launched differently, and they are too much depend upon their foundation and token sales and other developments. Even though Clarity had just got new site in January of this year, but still we need to have a lots of regulatory testers need to clarify whether these altcoins will be new Wall Street crypto that everyone going to invest. Wall Street don't need 15k cryptocurrencies, they only need 5 to 10 currencies that worth to invest. Their mode will be fewer lower ownership and fewer chaos and easy digestion of information. That should be the Wall Street model. Now let's get into the monetary policy in much more detail. In the case of Wall Street involvement in the federal policy, the crypto doesn't need permission. From now onwards, after the Wall Street, we need liquidity. Crypto going to be more dependent upon the liquidity in the market. The mechanics will be like this: lower rates, that means traditional bonds will pay less, so capital will flow into riskier assets like stocks and crypto. If Rick Rieder became the next chair, his scenario of 3% interest rate will apply. In that case, there should be aggressive rate cuts, and you can also see the aggressive balance sheet changes. That means a more liquidity injecting into the ecosystem. The philosophical shift of changing crypto from regulatory aspect to more of a store of value will play as a narrative in this case, and this will entirely diminishes the Powell's theory of Bitcoin as a speculative asset with no value. Even though this is a bullish sign for the crypto industry, there should be some hidden mechanics you need to understand before aggressively become bullish. BlackRock is currently holding around $70 billion worth of Bitcoin. That means they are the dominant players in the market. They are controlling the price discovery, and this is going to be more huge in the upcoming years if the Wall Street took over. This will put down the retail as a price takers, not a makers. And in the case of privacy, the Bitcoin itself just created to eliminate the middleman and making more private transaction. But in the case of institution, every transaction has a KYC or AML compliant. This will questioning the privacy concern of the blockchain itself. And regulatory custody means government can seize or restrict any transaction. Just assume a entire country just forcing the transaction just because of a threat, because now the decentralization is anymore valid here. And crypto is an innovative product. In the case of innovation, DeFi is playing a major role in the market. But on other hand, Wall Street is more of a slow burn, like fully audited system. They need clarity. In this case, the DeFi kind of product will lag far behind if institution will took over the most of the crypto part. You will get the legitimacy, you will get the institutional capital and every regulatory clarity, but you will lack the revolution and the innovation that crypto giving. Now just question here whether this is actually a good or bad for the entire crypto industry. We should need a entire deep research video on regarding that. Don't forget to subscribe if you want this type of content. Let me end this video with the most controversial question that very few people still afraid to ask. Bitcoin was created in 2009 in response to 2008 financial crisis. As Satoshi said, the root problem with conventional currency is all that trust required to make it work. The central bank must be trusted not to debase the currency. This was the Satoshi's quote in 2009. He was imagining to create entire alternative system, more efficient system, not as a part of it. But in 2026, it literally need a system to survive. It need Wall Street to buy, it need Fed to accept, it need regulators to regulate it. The real question is not the Wall Street takeover of the crypto will make the impact on the price. Instead, how the crypto will survive in the Wall Street adoption and how we can sustain the decentralized mode throughout the year. Can you have a decentralized money managed by a centralized institutions? Can you have a revolution that approved by SEC? Can crypto become legitimate as well as free? To be honest, I don't know the answer till yet. We need to figure out from the next couple of months. Whether Rick Rieder will get the Fed chair or not, the trend is already clear right now. Wall Street is already on behind of crypto and they are accumulating very aggressively and they are going to dominate in the upcoming years. Even though it will increase the price of Bitcoin, it will create an existential crisis for the Bitcoin itself. Don't forget to subscribe to this channel for more this type of content where we will be decoding most of the macro aspects of crypto and how the Federal Reserve will impact the crypto market and the institutional adoption, etc. etc. Let's close this video by sharing the one of the important question that I was thinking in the last week at the time of Clarity Act proposal, whether the crypto will change the world or world is going to change the crypto, and where our path. That's an important question here. Me myself as a started as a crypto developer who believe in decentralization for a long time, but right now institutions are taking over and literally taking control of the most of the Bitcoin and Ethereum from on-chain to ETFs. The important question and the most truthful question that every early adopter of Ethereum and Bitcoin will ask is that, do we survive this institutional era, and how? See you in the next video.